Do 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 do. All right, dest, DEST. Destination Maternity Corp. Who cares what they sell? All right, man, it's that simple. My two last or two or three, whole bunch of my Secret Wars episode recommendations have come from ideas from the US stock screeners on stageanalysis.net. And look at this one, guys. Look at this one. Okay, let's zoom it up. I'm going to scoot over. Black margin. Zoom, zoom, zoom. Some monthly candles. You know where it starts. I identify the monthly defined support. Zoom it up more. Use the chart to your chart software to your advantage, man. Zoom. It's not going to make the move any different if you zoom in or out, but it's going to help you draw better lines, be more precise, and think freely. If you have a black room above and below and on the side, then you get to imagine, oh, is the price going to go there or down? At least you'll see both scenarios. Then having the price action of a chart fitted always to either be at the bottom or the high. Could be like that, but doesn't mean it can't go lower, right? Just because it's at the borders of your charting software. All right. So we can make a case that we're already breaking out. This monthly candle is a breakout above this 1, 2, 3, 4, 5, 6, 7, 8, 9. 9-month bottom pattern. Smaller patterns encompassed by bigger patterns with further away target, least probable targets. Here's the first one there. And here's the furthest, least probable of the possible targets up here. Send an alert there. So right here, just go, okay, let's do it this way. Now there's these regular implied measure moves added to the breakout lines, but I added something called profit target considerations, where I look, am I going to run into resistance? Am I on the good side of the resistance on the way to the target? Either just natural resistance here, defined by the monthly defined resistance, or previous support turn resistance following a breakdown, and that is also resistance right there. So this first target is going to bring us about just below this resistance here at a 434 level. So that's a pretty nice target. You go on your way to target, and before you start running into these into this congestion, you're out, profit taken. You wait a few months, more candles to add, and then you see how the chart's morphed and how to play. And then if you're greedier, take the most further away target, which has to run through this congestion area here around the 430 level. And that means, what does that mean? Well, it means maybe it's going to bounce a few times and then go all the way target, or bounce and go back down. Who knows? But it's just the nature of further away targets, or least probable, running into resistance. But what's good is the ultimate target is below or coincides with previous support and resistance, and you're on the good side of that also. So these are the two moves I would do just using my classic chart trading framework. And it all depends if we get a close above that magical 315 line, and we have a few more days before it happens. After that, these two targets are valid, the first one being more probable than the second. All right. That being said, let's scoot over to Stan Weinstein. All right. Oh, look at that. Ichimoku cloud. If you're above, green cloud, uptrend. if you're below red cloud downtrend, and that was a beautiful stage 4 breakdown, starting to breach the 30-week moving average. And you would have had some exit signals right here, right above here. If you want to see how we set up the exit signals, and it's crucial, right? Go check out my the earlier Secret Wars episode, the long ones. And I go in deep detail about how I would have played this, how I would have played the breakdown, how we would have moved our sell stops, the investor's way, the trader's way. Right now, concentrating on refining the buying process. All right, let me zoom. Okay. 315, guys. You remember that? That's going to be the monthly defined breakout. Now I'm going to do the weekly defined breakout. And it coincides with the monthlies. Look at that. Look at this candle. 4 times the average, but below 30-week moving average. Not the Stan way. What does Stan want? 30-week moving average going upwards. He wants a horizontal breakout line. Check. Horizontal pattern. Check. Wants the volume. Whoa, it's crazy volume. Look at that. That's way more than twice the average of the previous 4 weeks. He wants RSI going upward. Whoa, hold on. Mansfield indicator going upwards. This is the RSI. Not quite the same. But I still use it when I see it going halfway point going upwards. Now it's at 60 for that candle going upwards. I love it. And this is stage 2. One thing though we have to be wary of, and that is Ichimoku cloud right here. Potential resistance on the way. So it doesn't mean it won't go through next candle next week or this week, but it could slow down right here. Starting to evaporate. We're very close to being out of the cloud. So maybe this is just a place where around maybe where it could bounce back down, and after that breakout, and then you'd have a chance to get in on the pullback. Right here. So for those pullbacks, guys, Stan in his book, page 14 or 15, he tells us that, and it's so weird because it's just a small part of the book. I'd have to see if I missed something. And it says pullbacks, when they happen on very small volume, very light volume, contracting volume on the way back to the breakout line, it's an excellent opportunity to add. But then, so is that his only confirmation? Just pull back on low volume? What's to say the pullback doesn't go back all the way down to and completely invalidates a pattern? If you want to add chances on top of that, if you add some more definition to the rules, you could say pull back on low volume, contracting volume on the way back to the breakout line. So you could put an alert, and then let's say we had our breakout we say the breakout line's at 315, and after that 1 to 3 months later, price action comes back down close to that, in between 340 and 315 gets triggered. Instead of pulling the trigger right there, I want to get in, what you could do is just wait for the price action to go down, and wait for it to at least one green candle go up. So let's say you go up, pull back, red candle, another red candle, and then if you have a green candle, then you could buy here. What this tells you is it confirms even furthermore that resistance here, it hit the resistance. So if the last red candle followed by the green candle is above or touches the 30-week, the breakout line at 315, it's perfect. That means it really resisted, it held, and the price action started moving back upwards. So you could actually enter here. If you don't want to risk it here, even if you know it's on contracting volume, you're not sure about it, then you wait. You wait for it to go in, maybe a hammer candle where you know it's gonna. That means the price went all the way in. It sunk through that resistance, that support, but the market decided to suck it back up and close it above the breakout line. That is a great sign. And if it's followed by a green candle going upwards, then that green candle is a confirmation that the pullback has essentially terminated. And if it's now or never, it's the best time to get back in. So Stan says just contracting volume, light volume on the pullback close to or at the breakout line. You enter there. If you want to do it, additional confirmation, wait for that Japanese candlestick with the hammer, or doji with a wick going through the resistance, the support, and closing above that resistance line, and then wait just for one green candle to confirm that was really really the end of that pullback, and it's on a reversal, right? Because pullbacks, that's why people go crazy. They look like reversals, and then after that, people start freaking out. They don't understand. Well, there's pullbacks all the time, and it's always pullbacks. Pullback here, continue direction here, pullback here. And after that, you got to differentiate those from reversals. Reversals, heavy volume on the way down, goes through that resistance or barely that support. Dyslexic. Even in words, it's so weird. I see when I type, I always inverse letters, but when I talk, I seem to confuse stuff. So you could tell Patrick to quiet, be careful, don't make mistakes, Pat. You're confusing me. And that's about it. For reversals, just make sure that you're not in a reversal. You're really in a pullback, and you get those check marks there for the pullback. Just like you have a AAA setup for Stan, the volume, the Mansfield going upwards, horizontal breakout line, 30-week moving average going up. Pullback should be able to recite those things perfectly. And in your head, you should see examples after examples after examples. Flashcards. Okay, this is what I expect. This is what I expect. This is what I should see on pullbacks. Contracting on low volume. A candle that could probably sink through but closes above that breakout line. And after that, a green candle confirming that was the end. And that is, you can't ask for better than that. So this could happen probably here because of that red Ichimoku cloud. But Stan didn't have no Ichimoku cloud. Remember, the only thing he says is no close overhead resistance. So this is what Stan would see on his charts. Look at his books. He doesn't have no fancy Ichimoku cloud. He would see that, say, look, that's a super duper nice formation, and it's breaking out, 30-week average already angling upwards. He would enter here, and he would probably keep or half a position here, and then put the rest of half his position on the pullback 1 to 3 months later. Cool, right? DEST, man, looking pretty sweet right there. I just want to go back on the monthly just to check one thing. Should put an alert here at that resistance 434. I'm going to go back on Stan. And yeah, it's just above the Ichimoku cloud. So even the monthly defined resistance, it's there. But as far as doing a Stan Weinstein stage analysis, you have to recognize it. The price action could go through the cloud, and after that, it could also hit that zone, that resistance at the 434, which is a monthly defined resistance. And after that, bounce back. 1 to 3 months, guys. If you're in a trade, you're on the breakout candle, just expect that the price action is probably going to go down all the way to that below your entry point. Let's say you enter here, it's going to go all the way down to the actual breakout line 314. So let's say you're in at 342. Expect that within 1 to 3 months, the price action is going to go as low as 342 and almost even lower, 314. Test that and then go back up. Why would I do that? Why would I go into trade expecting it to go down? Well, it's the reality. There are breakaway stocks. Sometimes there's not, and most of the time they have the pullback. So you gotta expect it and anticipate it, and you'll have less chances of landing on emotional landmines. All right, DEST, you're in at stage 2. Confirm at the end of the week. But if you want to wait on that pullback, then I showed you guys how to do it. All right. Ciao. Do